another hot topic is ETF share classes of mutual funds. Now, you may know Vanguard actually pioneered this structure, and it allows an ETF to be used as a share class within a mutual fund. Now that the Vanguard patent has expired, there's roughly 50 firms that have filed to offer ETF share classes of their mutual funds and are awaiting SEC approval. So give us a little sense. We had a panel yesterday with a bunch of lawyers, which was very interesting. They seem to think this is a real hot burner, front burner issue with the SEC. Are we going to see this, and sort of explain why this is important? Don't assume everybody understands what's going on.
Yeah, so your first question, Bob, my thesis has been that it's a matter of when and not if. Per that panel yesterday, it's sooner than I think I would have expected. They expect it to happen maybe as soon as by the end of this summer. And why this is important is because it's a structure that ultimately could benefit millions of investors who have assets in mutual fund share classes today that would benefit from being in a combined fund that would have an ETF share class that could be used to manage the tax profile of the fund. So part of the reason mutual funds have been in outflows now for so long is that every year a lot of them have been sending investors effectively a lump of coal in their stocking at year end in the form of a taxable capital gains distribution, which they didn't earn, they earned because other investors left that fund. Yeah. So the ETF share classes appended to the mutual fund would help improve the tax efficiency of the fund to the benefit of everybody.
Because the ETF structure allows you to essentially wash a lot of that away.
And send all the low-cost lots out the back door via in-kind redemptions. So 51 firms now have filed as of Friday. It may be happening soon, but I think it's the first step on a longer journey because there's a lot that still has to be done and just kind of the plumbing of the industry to actually make this a reality.
Just explain what, if I have a mutual fund and then I have an ETF share class in that, does it matter if I'm in the ETF share class or in the mutual fund share class if this actually happens? What is there any advantage here? What should I do? And I presume this is this is an unallied good thing, right?
It is a good thing. I think you did a great job articulating how it's good for investors, and it's also good for a lot of the issuers here at this conference, for sure. It's really a game changer. And look, there's a lot of work that needs to be done in the background from a servicing perspective to make all the plumbing work, as you say. But the concept of multi-share classes certainly has been around the industry in the mutual fund context for forever, or for many decades. It's also a concept that is applied to ETFs really in other parts of the world where it's commonplace. It's just not the case here. So all of that know-how and the infrastructure really exists, and we're looking to apply that here. But ultimately, there needs to be a common solution that really helps to standardize this process along the industry to make sure that it effectively functions the same way. And also, most importantly, the distribution platforms, the brokerage platforms where clients access ETFs are able to do so, and those platforms are able to handle any kind of switching easily with a seamless experience for the shareholders. And easy to say, a little bit more challenging to do.
I want to move on, but any quick thoughts? Again, for the viewer here, if I have a ETF share class and I have a mutual fund share class, does it matter anymore whether I own one or the other?
It's more choice and access for investors. I think you've heard it multiple times on this panel. ETFs have been democratizing investing for a long time. We've seen it with active ETFs launching. We've seen it with some of the alternative strategies coming out. I think you could view share class, if that gets passed, as being another sign of kind of more access to more investors of different strategies.
So you can wash capital, these kinds of capital gains essentially through both of these share classes when they're there. That's the key point here.
Yeah, look, I think it's adding optionality for the issuers to be able to deliver the strategies that they have in the most effective way for end clients. And I think that's where this will wash out ultimately. So it's adding flexibility, which I think is a good thing overall. And we're just going to have to see, by strategy and from some of the distributors, what do they need to have in order to deliver the most effective solution to their client.
I want to move on. One or two final topics here. Crypto, we haven't talked about Bitcoin yet. The Bitcoin ETFs, you all know this, one of the most successful launches of any product ever in history. Nearly $100 billion is now sitting in Bitcoin and just plain spot Bitcoin ETFs and more in futures and options. I guess what's next? We have Solana futures trading now. There you go. Okay, we got futures going. Sufficient size markets here. That's sort of a buzzword, folks. For their spot Solana's coming down the road. Any thoughts here?
Yeah, I mean, we'll see. Certainly the regulatory environment's much more favorable than it was just months ago, and you've seen issuers respond with just a raft of filings for everything from Solana to, I think the most recent one was for a Pudgy Penguins ETF. So I think issuers are trying to test, just exactly how far can we go to continue to expand access to these different underlying assets in a format that is just more convenient, more useful, more accessible to your average investor.
What I find, I've had issues with Bitcoin and a use case for Bitcoin for a while. I've been a big backer of blockchain in general, but one thing I've always supported is ETF wrapper is the safe wrapper to have. Just like I supported the gold ETF in 2004, people had gold coins, they lost them, they couldn't find them, now the gold's held in a vault, you pay a small fee, it's safe. It's the exact same idea for Bitcoin. Whether you think Bitcoin has a use case or not, doesn't matter. If you think it does, this is a safe wrapper to have for it, and it's been remarkably successful. Of course, you see when it's down 20%, you get pressure on and potential outflows, but regardless, I guess the question is, can they replicate that with others? Is Bitcoin a unique use case in the crypto community, or can you do it with Ether or Solana or other forms of it? I don't know the answer. But
Bitcoin is very different from the rest of digital assets. I will say that. It is really seen as this global monetary alternative, whereas Ethereum and a lot of other digital assets are more kind of a bet on the disruptive abilities of blockchain technology more broadly. What I would say is, I think there's been a lot of focus on innovation. I think there's just still a lot of focus on adoption of Bitcoin. We are still very much in the early innings of people thinking about, could Bitcoin be playing a role in my portfolio? Right now, you're mentioning, the success of IBIT and Bitcoin ETPs last year. Only about 20% of those assets that we've seen into IBIT have come from the advisor community. And I think as you see more millennials using advisors, as they build up their wealth, more Gen Z, more transition of wealth from the boomers to millennials, you're going to see more advisors thinking about how can I help my clients use Bitcoin in a responsible way in a broader portfolio.
Yeah, I mean, that's a good point. Only 20% institutional. I mean, that means it's mostly retail still going in there.
So it's about 50% retail, 20% advisors, and about 30% institutions is the breakdown today. And I think it's still very early innings for those latter two.
But it's also all about access. I mean, I think that's a theme that keeps coming up. And again, back to some of these other filings that we've seen, I think, again, it's a race to provide that access. Clearly, with the products that are in the market, there's been a proof of concept. I think another iteration that we're also going to see, and certainly in some of the filings, has been index-based products. Again, trying to target those advisors that really are not looking to allocate in between individual assets, but are looking for broad-based exposure, not just Bitcoin, but the wider
Travis,
market.
Is the advisor community getting more comfortable with recommending Bitcoin? I mean, there are suitability issues here that haven't gone away. I said a few years ago, Bitcoin for grandma. That's a tough sell. What does it do for your portfolio? You have to say, well, it reduces volatility or it improves returns. You just say, oh, well, it's Bitcoin and it's a get-rich-quick story.
Look,
what does it do for your portfolio? How do you make that argument?
My sense is that a lot of advisors are still trying to figure out what they do with Bitcoin or crypto in general and where they put it in portfolios. Again, I think it's an access piece, and we've seen that for the industry. But the majority of flows and what we track and see, so that's one area that has seen some growth. You've also seen some of the leveraged and 2X type ETFs have some growth, but the bulk of the assets, and especially the bulk of the active ETF assets, are sitting in those traditional core sectors. And we see that as really the battleground for where the active ETF industry is going to be won or lost, Bob, over the next 5-10 years. So most of the development, most of the issuance that's been happening has been in those traditional core sectors, both equities and fixed income. So again, some of these other areas are interesting in terms of additional portfolio allocations, not something that we have been involved in on the crypto side, and we typically we're not quite sure where they fit in portfolios yet, but those traditional core sectors is where our focus is.